Sorry I kept you waiting forever and a day, but now we're out here together with nothing standing in our way. Can you feel the attraction? Feel the attraction. Can you feel it between us? This energy's inside us like electricity. Feel the love running through like electricity. Feel the love running through like electricity. Like electricity. Taking over your body, it's flowing through your mind. This feeling's got me on fire. Don't ever leave it all behind. Can you feel the attraction? Feel the attraction. Can you feel it between us? This energy's inside us like electricity. Feel the love running through like electricity. Feel the love. Can you feel me?
I'm walking alone, the streets are empty. The only thing I can see is my own silhouette. I'm getting stronger, step by step. The clock is ticking, but there's no time for me. I've been flying from town to town, from London to Taiwan. I've been all around the globe trying to protect your soul. We are heroes tonight. We will fly above the sky. We are heroes tonight. Yeah. We are heroes tonight. We will fly above the sky. We are heroes tonight. Yeah. to town, from London to Taiwan. I've been all around the globe trying to protect your soul.
I fell and lost to the war, shot me dead. I was lost and I said to the voices in my head, I gotta get up again. I gotta get up to another day. I'm not giving up again. I gotta get up. I gotta get up. Giving up again. I gotta get up. I gotta get up. I gotta get up Look into my eyes. My heart beats like a drum. You listen to my lies. Love is far to come. Your love is far. Running at the speed of light, kissing under city lights. Calls me in this morning time, but it just goes on. Running at the speed of light, kissing under city lights. Calls me in this morning time, but it just goes on. Gotta get up again. I gotta get up to another day. I'm not giving up again. I gotta get up. I gotta get up. I gotta get
Welcome. How are we doing, traders? Who do we got in chat today? I gotta refresh it here. We got 24 viewers. What's going on, everybody? Welcome. Let me switch the music over here. How are we doing? I see we got Sunlit Trading in the chat today. How you doing, Sunlit? Welcome. This is the first episode of Trader Spotlight interview, and we're starting things off strong here. You should wear tux for these. I did kind of dress up a little bit, but then I wore this hat because I just got out of the shower. which is always the case, you know. I always wake up late. Hey, first time chat. Thank you for the first time chat. KDF, how you doing? Welcome, welcome. Yeah, I wasn't gonna wear the hat. It's a whole thing. Say hello to my co-pilot today. Is Baby Yoda, straight from Mando Trading. I actually sent him over, so he's gonna be co-piloting today. Thank you for the first time chat from Headmeister. You are legendary. Doing great. Great to see you. Yeah, good to see you too, man. This is your first time on Twitch? Welcome. Welcome to the Twitch family, the Millionaires. All right, let me flip over to Twitter here in a second. Make sure I'm on the right page. All right, today we're having Ben Killer. All right, Spy Hates Me, East Side Options Trading. We're going to dive into his story, his beautiful, beautiful charting. Absolutely stunning. Look at these charts. You know? Look at this. Just something out of like a chart porno. You know what I'm saying? Absolutely beautiful. So, oh, that's a knee slapper. It kind of was. All right, without any further ado, I'm going to turn on the music here. And I'm actually going to switch playlists to the Trader Spotlight playlist, more chill. And we will bring on Ben right now. All right. Hello, Ben. Are you there? Come in, Ben.
Hey, how's it going?
Good, man. How are you?
I'm doing great. I'm doing great.
Awesome.
Thank you so much for having me on. This is awesome.
Yeah, of course,
It's my
man.
first time on Twitch, too. Like on a Twitch interview or anything.
No way. Yeah, no, I love this
Yeah.
platform, man. It's my favorite. A lot of people ask me why I don't do YouTube or, you know, these other platforms, but I don't know. Twitch it's built different. It's just a lot of fun. So welcome to Twitch. Welcome to the platform. We got 53 viewers in chat. Awesome. Lots of people out to learn something today. That's great. You love to see it. Thanks for coming on the show, man. You are episode 1 of season 2 of Trader Spotlights. That's very exciting. The show is now in seasons, 8 episodes per season, just to give me a bit of a break in between.
Right.
Yeah, I know exactly. So thank you for coming on, man. I appreciate that. And yeah, so if you guys are new to the show, we're just going to go over basically Ben's kind of history, how he found trading strategies, and we'll take live questions in chat. If you guys do have live questions, make sure you at 100 a million. Then I'll see it pop up on my left over here. I have the chat set up. So if you guys have any questions at any point during the interview, I will read them out at appropriate times. But yeah, without any further ado, man, once again, thank you for coming on. And let's kind of start by, you know, how's your trading week and how's your weekend going so far?
My trading week, for it to be, you know, the price action that we got, it was actually very, very good. I think I collectively had one loss throughout the whole week, and that was literally the last play. And it was Lucid, ironically, and I cut it too soon, and then it ran 800%. So that was kind of a slap in the face. But other than that, yeah, other than that, it was okay.
That's brutal, dude.
It was awful.
Oh, well, it happens, right? What are you going to do? You got to cut at some point if you're starting to get uncomfortable. You never know, right?
Right, exactly.
So, and we'll go over East Side options trading at the end as well, and we'll talk about that. But
yeah.
Before we get there, let's dive into a little bit of your past, man. Let's hear how you kind of found trading. Like, where'd you first stumble upon it, and how'd you develop into your style and trading strategy and your rules that you have today?
Right. So, my dad actually it still is, involved in the stock market, off and on throughout, you know, kind of my childhood. You know, he would dive into it a little bit. He was more of a long-term investor and still is. He still has shares of pretty good companies that he got back when I was young. So they're like 10, 15, 20 years old now. He still has holdings in those, collecting dividends, so on and so forth. So I've always kind of had that kind of background into it. And then my brothers, they got heavily involved in the actual trading aspect. So really, when I started out, I actually started out with long-term intentions, kind of following my dad's footsteps. And then, I ended up getting on social media, this and that. I get older, and that turned into, I was like, okay, I kind of wanted to buy and sell a little more often, right? So, started getting into a little bit of swing trading. I'd buy something, and then, I would sell it like 2 weeks later, and it was all cool. And I was developing small little strategies here and there, but I was still a very novice on the whole thing. And then, I was like, this day trading was, it's always been a big goal for a lot of people. And so I was like, yeah, I want to do that. And so I started day trading. And this when I kind of got involved into small caps at the time. I was just day trading and swinging small caps. And I was like, yeah, this is cool. Kind of developed small strategies, but still, little did I know I was still an extreme novice at the time.
Right.
And that's when, yeah, I jumped into options trading, and that humbled me very, very quickly. Actually blew up more than one, really. One pretty decent sized account, and then the other ones were just kind of market tuition. But it led me to um, kind of putting a hold on it and actually being like, okay, if this is what I want to do, I really need to dive into actually how to do this in the background and the understanding behind options, how they work, how the stock market works, how money moves, so on and so forth. And that's what I did. And then, I came back with a real strategy of instead of, hey, this is going up, let me buy weeklies. Right. So,
Right.
and that's kind of what I did. Yeah.
Okay, no,
Yeah.
that's awesome, man. And so while you were kind of learning, excuse me, while you were learning and kind of building your strategy, you blew up those accounts or whatever, as everybody does. Were you working at the time as well, or was this kind of your only your gig?
Yeah, I was.
Okay.
I worked in the healthcare field for multiple years. That was kind of the area of my studies. So, I actually quit that last year.
Oh wow!
Um, I grew
Congratulations.
my account big enough. Yeah, I also have. I'm a full-time options trader, but I also have, long-term investments to where, really, if you want to put it on paper and dive into everything, I'm probably more of a long-term investment, and my options trading kind of funds that. So that's how my trading style works is I put a lot of my money into a long-term account, but my options trading is definitely what, pays the bills. It's my
Hmm.
profession. So, but yeah, I was able to quit last year once I felt comfortable enough to where I could actually leave my stable job, and move on to something that I thoroughly enjoy, which I did not enjoy the healthcare field. I loved helping people,
Hmm.
and that's why I like what I do today still. So,
Yeah, definitely, man. Um, so would you say that your TA in small caps kind of helped out in your TA with large caps, or is it completely different?
um, it's the same kind of in a sense, but it is also very different. And one of the things that I actually have, that I keep, in the back of my mind and in front of me is don't trade options like you trade stocks.
Hmm.
Because if you trade option contracts like you trade penny stocks, you're gonna get brutalized. There's different ways you got to go about it. It's just completely different strategy. A lot less cushion, in some areas. So I think the TA behind it was kind of a good foundation. But when you trade options, I feel like you have to look at TA a little bit differently, in my opinion.
Okay, got you. And are you so are you swing trading and day trading, or is there one you prefer over the other?
Un- oh, you broke up a little bit. I can't hear you.
Oh, sorry. Yeah. I just asked. Are you more towards swing trading or day trading? Do you prefer one over the other, or are you kind of balancing both?
Um, I'm 100% for swing trading.
Okay.
Even with options, but with the market that we have right now, my swing trades are definitely a lot shorter than what they used to be, and my day trades are more prevalent.
Okay, got you. And tell me a bit about your swing trading. What kind of setups are you looking for? What charts are you looking at? If you want, you can pull up some examples. And what are you really looking for with your swings? And do you apply any fundamentals as well?
Yeah, absolutely, 100%. I apply fundamentals quite often, especially right now. So, sector rotation is a big thing. You got to see, in my opinion, you got to see where money's going, right? So, um, that's what I always try to do. So recently we've seen money flowing into industrial. We've seen money flowing into Dow. We've seen money flowing into value stocks, and so that's kind of what my focus has been on when it comes to swing trading. I was able to swing trade a few of those. I'm not sure if people can see my screen.
Yeah, I can pull it up. Here we go. Bam, you're good.
Okay, cool. So, like I said, I like to see where money's rotating, and obviously by doing that, I pull up kind of the X's. You got the building, electronic, financials, industrial, technology, so on and so forth, and that kind of helps me decide every day kind of what sectors are booming and what sectors aren't. So, something's just going to be money moving into something somewhere, right? So this is the Dow right here. So, while SPY has been kind of indecisive, the Dow has been on kind of a decent uptrend. So that's kind of what my priority has been Dow, and then XLP names like Walmart, Costco, um, industrial names like Cat, and we have Coca-Cola, and then energy names as well. So as like Oxy is kind of high on my list. It's lagging a little bit behind. You can see Exxon kind of parabolic lately, and then we have Oxy kind of flagging right here at the top. Whether energy is going to keep going, will really push this up to a new recent high. And so I kind of look for things like that. I like to see where money's flowing. I may not be playing the most popular names when it comes to swing trading, but as long as they move, it doesn't really matter. So um, a lot of people like to play strictly tech or whatever, but recently I like to play tech names as well. But a lot of it seems like money's flowing out of the Qs and heading into more of those value names. So that's kind of what I'm looking at when it comes to swing trading is wherever money's going, right? So if the Qs are booming, I'm gonna put money into tech, catch a trend on tech. As far as formations, I like to see reversals out of downtrends. Kind of like we see the reversal started putting in uh, right here, put in a kind of a hammer right here, and then started making us higher lows, and it's continuing to go forward. So when it goes to going long, I like to see reversals going and out of downtrends, and then when it goes to going short, I like to see bounces kind of off supply zones, right? So you could play swings on. Well, I can sometimes you could play. I'm also I don't like to swing short a lot of times. I don't mind playing short, but swinging short is kind of it's different. People say you can inverse the chart, but I don't feel that money moves the exact same heading down as it does up. But yeah, you can play bounces off supply zones and demand zones, and those all work really well. And then my main strategy is moving average undercuts. And I actually made a thread on this not too long ago. But you pull up like the 8 and the 21 being my most favorite exponential moving average. And you can watch for things to actually kind of bounce off of a supply zone, undercut those moving averages before making a move forward, right? So that's one of my main strategies because you get faked out a lot, and a lot of people do. They're like, "Oh, well, it's back under the 21. Well, it's probably going to start going down, and then next thing you know, it throws a hammer up, and boom, it's on an uptrend once again." So I try to capitalize on those. We saw a lot of those in those boomer names recently. Those moving averages undercut, they started falling under the 8 and 21, and next thing you know, they were on a complete rally to the upside. So
Okay,
that's one of my main strategies. Yeah.
gotcha. So by undercut, you mean fall beneath both those lines and come back?
Right, right. So like
Right.
this one on MU, this was an earnings, so this is kind of a poor example, but same principle applies. I'm looking for MU right now. It's in a decent consolidation area, but I do believe it's going to come to at least below. This is the 8 moving average right here,
Okay.
exponential moving average, and then come at least touch probably close to the 21 before making a move back up.
Got you. Okay. And tell me a bit about your. So we talked about a bit of your favorite indicators. Are there any other indicators and time frames that you like to use? We're on the daily here. What are the ones do you like to look at? Maybe for like a specific entry when you enter a play or something like that.
Oh yeah, absolutely. So daily, I plan all my trades pretty much on the daily. My watch lists are planned on the daily time frames. I believe those give the best areas of support resistance. You can zoom out the weekly and the monthly. Those look good as well. But for my intraday trades, my entries, I bounce around a little bit, but the 3 minute is definitely where I get a lot of my entries and exits from because the daily chart can look good, but it can give you a bad entry on a 3 minute chart. So, for example, Walmart, right? So Walmart looks really good on the daily, and it's kind of breaking out here. It's trying to break out of this downtrend. It's kind of flagging at right here. But that daily on Friday, it looks good for a potential swing, but that daily on Friday was kind of extended. And you can kind of see that on the 3-minute chart. Just like it's hard to enter a swing when something is at the high of the day, where it looks the best and it's sitting at the high of the day. And it's like, well, that's probably definitely going to come down at least one more time before actually going out again. So I look for my entries on a 3-minute. That's for swings, but for day trades, I just look for areas of kind of consolidation. If it's like trending on the day, like if I wanted to day trade Walmart, I would look for kind of an area of consolidation if I believe it's going to go higher on the 3, and then I switch between the 3 and even the 15-minute. I feel like the 15-minute can give it's less noise and can give good signals as to where to kind of enter a trade and exit a trade.
Yeah, no, definitely. I've been a big fan of the 15-minute too recently, just for like general trending and stuff like that as well.
Right, right.
Uh, okay, awesome. No, let's talk a little bit about the end of the trade. So we've entered into our trade that we like. Where are we taking profits, or where are we cutting for a loss? What's your kind of your strategies there?
Yeah, absolutely. So, still on the 3-minute chart, I still like the 3-minute chart. Oftentimes I keep that 8 and the 21 up. I feel like I know it's very popular, and I guess it's a bit of a cliche kind of strategy, but it works. So if I'm long here and say I got in somewhere close to open, I probably would have been, I absolutely would have been taking some of my profits here. That first close underneath the 8 is going to give me a signal that, hey, this could potentially start to put in some lower lows and actually, start to head back lower. But so that first close under the 8, I'm definitely going to be taking some profits there, or just the premium pump. So I like to catch premium pumps on weeklies if I'm day trading, where that volatility comes in and all that volume comes in. You can see your premium prices really raised. You can catch a nice trim or have your position there if you're day trading. And then, yeah, like that, like I said, that 8 moving average, that first close under on a 3-minute chart, um, a lot of my position's gone. I'm aiming for to get in and kind of get out. And then I watched the 21 as well. As you can see, it follows the 21 well. It never really got a close under the 21. So this one was one you could be able to ride up. You can see it followed that 21 reliably, and you can kind of use that as a, hey, if it's still not gone over the 21, that trend is still valid and it's still there and it still wants to push more. And you can see once it did finally get a close, the first close under 21, you can see it just dumped, right?
Mm-hmm.
Threw up a bear flag and then dumped again. So,
Got you. That's awesome. Now,
but
sorry, go ahead. Go ahead.
I was about to say I also use volume as well. If there's no volume on the move, um, then it's likely to just fake you. So volume is also a big indicator you can watch throughout the whole day. You can kind of capitalize on those volume moves. The premium prices are going to get raised a little bit, and those, so you can kind of capitalize on those for trims, scales, or just taking profits at those areas as well.
Okay, cool. And is that kind of what you're looking for with your swings as well? Your price targets on your swings?
Yeah. So depending on how long I went out on real swings, which I kind of been laying low on those a bit recently, but um what I look at for real swings is kind of the same thing, right? So like Costco, for example, um this is one that if you were lucky enough to tell that sector rotation into XLP, then you could actually be able to capitalize on the swing right here, and you would actually be able to ride it for almost a whole quarter. So I like to go really far out on my option contracts on high conviction swings, and kind of give them time to work. And the way I do that, if it catches an uptrend like this, I still do the same exact thing. If it never gets to close below that 8 moving average on the daily time frame, that trend, in my opinion, is still valid. Obviously, you're going to see your options appreciate a little bit here, but as long as that trend's still valid, you will see that come back up. Now, say we were right here, our options came down a little bit, obviously, from when we were up here, but we never got that close underneath the 8. So that, in my opinion, would still be a valid run. So you just kind of let it work out. You got obviously a few more months left on your option contracts. Just can't get too antsy. You got to be patient with option contract swings, because you got to be okay with watching your premiums go up, and if you didn't trim, watch them go back down a little bit. And that's kind of what I do. I watch that 8, and as long as that 8 has continued to hold, then I'm going to continue to hold as well, because that is, a rising support for the stock. And obviously, once you saw it broke that 8, it kind of made a pretty massive dump next day. So that close under the 8, definite sell signal right there.
Okay, got you. And are you kind of scaling in, scaling out on the way, like trimming, like you say?
Oh, absolutely. So,
Gotcha.
a lot of times I'll buy for like 3, 4 months out, and then um, I'll trim sometimes the same day if the move is large. Like if I'm already up 20% in the
Hell
same day,
yeah.
I'm like, I'm not gonna let that go, right? So I'm gonna trim, or I like to roll contracts as well. So eventually, like if you kind of catch a trend like this, you can continue to roll either to the same expiration, different strike price, and if you continue to do that, by the end of it, you're rolling on a free position. You've already taken all of your cost bases out, and you're just cruising with the trend now, and you're risk free. You're sitting 100% profits, and you're just letting the trend do its thing.
Gotcha. No, 100%, man. I like that. Um, Now, as far as cutting for a loss, when we're kind of touching on it with your 21 EMA. When will you actually cut? Like let's say you're up and then it does that little pullback but doesn't quite break down underneath the 21. When will you cut for a loss, basically?
All right, so let's say I entered this one late. I don't cut for losses on percentage loss alone. I feel like there has to be a technical reason or a fundamental reason as to why I'm cutting for a loss, whether the company had bad news or whatever the case may be, being fundamentally. But technically speaking, let's say I entered somewhere up here and I'm like, okay, I think Costco can keep, I would enter up here, and then it did close below, um, I was up a couple of days, but it did close. Like it made a massive fall, 2 selling days in a row. And it's opening up below my entry. If I'm negative and it's looking like this, it looks like it's peaked and rounded off. But I just price action to me, intraday. Um, Say that SPY was, mooning this day. SPY was up, and then XLP was just making its move, stepping down, stepping down, stepping down. I would kind of take that as, hey, we see money rotating out of here. So I kind of use sector rotation to my advantage there as well. And that's for swings. When it comes to day trades, I use levels when it comes to day trading. So if I'm looking for a break of this level, or maybe a front run of the break of this level, if that fails, I'm gonna cut it like automatically, and that's what happened to me on Lucid. I was
Right.
trying to front run that 40 break, got in, rejected that 40. It was 0 DTE, so I cut it for a 50% loss. And then just to see the market rebound, and then it broke that 40 level, which is a very, very big buy zone for a lot of retail and a lot of funds. So we saw it go pretty high off of there. But you got to respect your rules. If it rejects an important level, if I'm looking for a level that needs to be over for me to continue to be in the trade, if it rejects that and starts heading back down, I just cut it. I mean, it can come back, but you can't base your whole trade on, oh, I hope this is going to come back, right?
Right.
So
Right. Okay, got you. Um, we got a quick question in chat. Thanks for the follow, methods. He's asking if Costco has a gap to fill at 524.
524. Let me look on an hourly time basis. It does on a smaller time frame,
Okay.
as you can see right here. And we're actually seeing, so side note on that, we're actually seeing money rotating out of these value names. Costco being one, especially Home Depot as well. We saw kind of a breakdown. So these are actually potential shorts, and these are some of the down. Like Home Depot is a big down name. UNH, big down name, and we saw that one break down the last couple of days as well. And then Microsoft being a big down name, we're actually seeing that one break down, and that actually filled the gap here, right? So
Right.
I'm watching a lot of these names that, especially UNH and Home Depot, which have been kind of market leaders for a while. They've been on a pretty substantial uptrend. Actually watch for those to kind of top and move back down, because I think that kind of cycle that they're moving on is working its way out and rotating into other things.
Got you. Is that something that you look for to trade gap fill plays?
Oh yeah, absolutely. Especially on on Costco, on the smaller time frames. I feel like the smaller time frame gap fills, like on the hourly, we see this one right here, all the way back down to 524, like you said. Um, these smaller gap fills are definitely ones that get filled and followed through a lot easier. Ones that I do not play very often though are those earnings gaps. Kind of like Roblox has Roblox has been filling that earnings gap on the way back down, but those earnings gaps get filled in increments. They don't get filled all at once. So there's
Right.
big power earning gap ups or gap downs. It takes a long time for those normally to get filled, and it's not going to happen at once. But you catch these ones from a small gap. This was from earnings, but it wasn't very large. We catch those small gap ups that once they enter, it's really not too far back down. Those can definitely get filled pretty quickly. And so those are the kind of the ones that I watch for to play. But those massive ones on the daily time frames, I kind of stay away from those because a lot of buyers or sellers in those areas, the top or the bottom of those areas.
Right. No, exactly. Okay, so yeah, you brought up a little bit. Let's talk about earnings. I think that's pretty interesting. I'm horrible at playing earnings. Is that something you look to trade, or do you avoid them?
Okay, so I have a set of rules that I'm only allowed to lose 3 earnings plays per season, and I go cheap on the earnings plays. I get cheap contracts. They're 100% lottos, but 3 is the max I give, and usually it's 3 strikes and I'm out. Like I'm awful at the, it doesn't matter what you know or what a company can have good earnings reports and bad guidance, and the next thing you know, it drops 10% and you're on call. So, I personally don't play earnings that much. Like I said, I have 3. If those 3 lose, then I'm out for the whole earnings season until next one. So we got earnings season approaching again. My 3 is now refreshed, and so I'm ready to play 3 earnings. But I won't play it on a sector or a company that doesn't react well to earnings. So a lot of energy stocks, they don't react. They don't make a big enough move for a lot of times for it to happen. Then you buy a call or a put, and next thing you know, you get IV crushed, and it's worth nothing, even though the stock didn't move anywhere.
Right. Exactly. No, that's really funny, man. Mando Trading in chat says I like that. I might have to use that. That's good.
Yeah, give yourself an allowance because it's 100% a gamble, and it's just for fun, in
Yeah.
my opinion.
Yeah. I completely agree with you there. Um, Now with you said you're big on fundamentals, sector rotation. That's kind of your bread and butter. However, is there maybe a small group of stocks that you tend to flock back to if you don't see something you like in the market?
Yeah, absolutely. So there's like I said, I'll do like playing tech names. Those big tech names. You got Microsoft, you got Apple, you got Google. And then used to Roku was one that I would play a lot, but a lot the price action now has been kind of stagnant and wishy-washy. But those ones that give you high volatility, you can find a move intraday pretty much at least 3 or 4 times a week within those stocks. If you can't find anything you want, like Microsoft, um, there's not something you like on the daily, then there's going to be something that you're going to like, kind of on um, the hourly chart or whatever the case may be. But these ones follow. I feel like they follow technical analysis fairly well. Like Microsoft, I'm kind of looking for this to rebound a little bit before going if it comes back down. It follows the 100 moving average, obviously very well. So this is one that I kind of flock back to always. Apple, obviously being another one that I'm always looking at intraday because you can catch a move intraday. It seems to move one way or another 90% of the time. Either that's up or down at a pretty parabolic rate. So if you can catch that move wherever, and then Tesla being another one. Tesla to me doesn't follow technical analysis the best. Um, but if you can catch the move as it happens or before it happens, whether it's just a 15-minute move, the premiums just get pumped insanely. So those high volatility names, I can name off quite a few of mostly semis. Like I like AMD and Nvidia and MU,
Right.
and then like I said, Microsoft, Google and Spotify. I don't like Shopify anymore. That's on my do not trade list. But
Okay.
yeah, just a lot of those high volatility names, those very, very, very popular names that you see all over Finchwit.
Yep.
They can produce some good moves if you can really capitalize on it.
100%. I think Tesla's actually one of the first stocks that blew up my account.
That does not surprise me.
It's like I was first learning options. I was like, yeah, I'll trade Tesla. It's like, okay, I'm not going to trade Tesla.
Yeah, it's pretty insane.
ESQ Trading's in chat. She says, hi, Ben.
Hi, ESQ, I love you.
She's the best.
She is, isn't she?
Yeah, she frequents the stream a lot. What's going on, ESQ? How you doing? So there's some tickers that you love to trade. You have your certain indicators for each one that you like. Is there, I guess a two-part question. Is there a sector that you don't like to trade, or a group of stocks that you don't like to trade?
Utilities, not big on trading a lot of utilities. They just in the building materials. So XLB and XLU, I feel like produced kind of the worst, not worst stocks to trade, but they're very, very boring. They're good for swing trading, especially if you like swing trading equity. Then utilities definitely, good moves there. And then, like I said, building materials. It's just the stocks in those sectors. They're just boring, and so I don't try to play those. And then I have a couple other ones that have moved their way to my do not trade list. Disney being number one. I absolutely cannot stand trading Disney. I feel like the price action is very, very bad. It follows nothing about technical analysis, and then yeah, it's just overall, and it gets stuck in these awful consolidation periods. It's just one of my least favorite stocks to trade.
That's so funny, bro, because there's so many people who are just like the biggest traders of Disney. Like, they love it. So
I hate it.
I don't really like it either, man. I'm kind of leaning towards what you're saying. Like, I'm not a big fan of it. That's funny.
Yeah, I feel like it just wicks up and then just comes back down and then consolidates, and it's like, what in the world is this?
No, that's funny, dude. So you talked a bit about supply and demand. Is that something you incorporate a lot into your trades?
Oh, absolutely. Supply and demand zones, even on kind of micro time frames, are very important. Even with stocks like Disney. Disney's a big one that kind of, used to before it fell out after earnings, kind of did follow a decent supply and demand zone. So you can see, like, kind of up here, it would come down here, and you can kind of capitalize on those more so with equity than you can with options.
Okay.
But a lot of those, like, I like to play demand zones most. Obviously, most people like being long, rather than being short.
Yeah.
It's just a psychology thing. Me as well. I don't mind going short, but if I like to see things go up. It's just all a psychology thing.
Yeah,
I'm
yeah.
working on getting better on that as well. But you can watch those demand zones, and like I mentioned, the moving average undercuts. You can do the same thing with demand zones. So if you see a stock kind of undercutting that demand zone, falling below it a little bit, it is likely to get bought up like very quick. And you can see
Okay.
Disney has kind of done that multiple times. It comes undercut it there, came right back up,
Wow,
all the
yeah.
way back up to the supply zone, undercut it there, came back up, undercut it there. And those are usually very, very short moves, but you can see buyers really stepping in at those moments and pushing the stock back up. So
Right.
supply and demand zones, they're awesome for very short trades, intraday trades, or holding overnight, like 1 or 2 days maybe, where they make the move right back up to the supply zone.
Got you. Okay. No, that's awesome. I love that. Some good rules there. Let's talk a bit about small accounts. Now, there's lots of traders with small accounts, or traders who are, kind of working a day job while they're trying to learn this game. Let's start actually with balancing a day job and trading. When you were doing that, what was the balance like there? How did you manage to successfully trade while you're working your full-time job?
That's very hard. Luckily for me, a lot of times, I had access to a computer, so that kind of helped me out a bit, in those moments. but I had a very strict set of rules when I was working a full-time job, and my number one rule was always no weekly contracts open while I'm actually at work. You look away for 5 seconds, and next thing you know, your account's flipped upside down somehow, and that Chewy contract is now worth negative 75%. And I say Chewy because that was kind of the one that set the rule for me. I oversized on a Chewy play. I looked away for like 10 minutes, came back, and it was like almost worth nothing.
Shit.
Um, yeah, so Chewy, I mean not Chewy, but no weekly contracts. And then if you don't have access to a computer, it's very, very hard. But I also, when I worked, my schedule, I always had at least 2 weekdays off every week, and so that kind of helped me. I can really focus on honing in my day trading while I'm not at work. And I would open up those swing trades, those long dated contracts that I could kind of manage while I was at work, whether that be while I was at the computer or just keeping an eye on it on your cell phone. Not a big cell phone trader. I don't really execute pretty much anything off my cell phone, but it does give you a good monitor while you're not around a computer, right? So
Right.
you can monitor those positions that way. And obviously set alerts, set alerts. That's a biggest thing that can help you if you are in a swing position, or if you happen to be day trading at work. Even if you are attentive to your computer 99% of the time, there can be that 5 minutes that you get pulled away to go do something. Um, Set those alerts because you never know when something fundamentally could happen within the whole market, or something fundamentally can happen into that individual stock, and you don't want to get caught in a trend that's not going in your direction.
Right.
That happens automatically, right? And then have your stop losses set. Even on weekly contracts, have your stop losses set. um, there's a whole bunch of strategies for stop losses. For me, I put them um, I'm kind of loose on my swing stop losses because I give them time to work. But now that I'm attentive to my positions 100% of the time, because I work from home now,
Right.
obviously. I always execute my sales manually, because I feel stop losses give me a bad fill. So I like to execute them manually, but I do set alerts on where I would want to be stopped out. So like I said, alerts is the biggest thing. And then if you're working with a small account, because I know you just brought that up, small accounts, um, while they can be rewarding, it's harder to make money with less money. It's easier to
Yep.
make money when you have more money. I'm sure everybody knows that. But don't get discouraged. Hone in on the strategy itself, and focus on learning, focus on developing that strategy. I know paper trading, people say there's no emotion in it, but you could still develop a strategy within paper trading if you want to go that route first before actually putting real money into it. And because you could still, or in back testing is another huge thing. Go back if you're reading up on a new strategy, say the strategy that you've been working on for months and months and months, it just isn't working. You've tried everything, you've tried changing around, but that strategy physically for you doesn't work, and you're like, okay, well, I like this new strategy that I saw here. Go back test it. Go back either on forex charts, or go back on 10 years ago to a stock, but don't look at the daily chart. Just pick that day and see if you can mimic this strategy, but try not to look at the daily chart, so you have no insight of what actually is going on. So I say forex charts. You don't know if you don't know anything about forex, then you're obviously not going to know what happened that day. So just go back, just pick a random date and pick a stock and start from the beginning on a 3 or 5 minute chart, or whatever the strategy calls for, and see if you can actually trade that strategy successfully. Emotions, no emotions, doesn't matter. If you can't execute that strategy with no emotions, then you're not going to be able to execute it with emotions, right? So,
Right. Jaylish is asking, can we go more into back testing, how to do it, etc.
um, yeah, you can backtest on multiple. I know TrendSpider has a backtesting, TradingView has backtesting, and then Thinkorswim has backtesting as well. On demand, you can just pick a date and you can go back to it, and you can whatever strategy you're looking at trying to apply, just apply those indicators, whatever they are, or just the price action, the volume, and just you can and Thinkorswim, that's what I used to do it in a lot. And you can paper trade basically that day. So you can mimic it on demand. You can execute trades, get in and out. Obviously, the fills are going to be kind of not the most realistic because it's not real time, but even still, it kind of gives you um, a feel for if you're going to be able to do this or not, right? But as far as I know on Thinkorswim, it keeps all that real time options data, so you're going to be able to experience the decay and the delta and everything um,
Gotcha.
within that date, right?
That's really cool, actually. Does TrendSpider do that?
TranSpider has backtesting. But honestly, I've never used their backtesting because I've always done it on Thinkorswim, and
Okay.
I haven't backtested for a while now because I feel like the strategy I use,
Oh
I've
yeah.
honed in on it. So,
No, for sure. No, yeah, I'm just thinking because I'm in Canada and we don't get TOS anymore. We did for a time, but they stopped. So I'm like, what can we use in Canada? I'm not sure. But
TradingView also has backtesting,
oh, does
as
TradingView
far as
have
I
it?
know.
Oh, okay.
Yes,
Got you. That's perfect. Jails just says thank you, by the way.
no problem.
Um, TradeStation has it also, says Mikey K in chat. What's going on, Mikey K? Welcome. He's another Twitch streamer. Check him out, guys. All right. So we kind of covered small accounts and general rules. Do you have any kind of tips for small accounts or psychology that a small account holder should have?
Yeah, absolutely. My main one is, like I said, focus on the learning process rather than um, the actual money that can be made. When you focus on the end goal, the actual money, the actual income potential, when you focus on that too heavily, you're going to get way too emotionally involved into the trade itself. And you're going to, in your mind, you're going to have way too much on the line. All right. And so when it comes down to small accounts, as you build it, remember that position sizing. Never oversize your position. When it comes down to small accounts, obviously you're going to have to put more than just a few percent of your portfolio into a trade. That's just because contracts are expensive, especially if you get up into some high underlying mega stocks. But so you're gonna have to put more, but just be strict um, on your trends and be strict on your position size. And what I mean by being strict on your trends is if that trend goes against you in any direction, go ahead and cut it. You're gonna save yourself a lot of money by just cutting your losses once you identify that trade is now going out of your favor, then sitting there hoping that that trend is going to come back into your favor because next thing you know, that 50% of your contract is going to be gone, and that could have been 25% of your portfolio gone as well. So, and a big thing for me, even without a small account, is scaling out. If you're able to buy more than one or two contracts with a small account that's not, putting your whole portfolio in. Say you get a small underline that has cheaper contracts, you're able to buy quite a few of them, scale out appropriately, 15%, 25%, 30%, whatever you feel comfortable. But the lower the numbers, the more steady that income is going to be. So if you aim for those 15%, those 20%, you're going to hit those a lot more often, 100% more often than you're going to go hit those 100 and 200%. So while I know those feel nice and those feel awesome, for me, I do hit those occasionally, but it's never my full position. It's only like a few runners that make it up to that point to where I'm actually hitting 100, 200, 300%. By the time I actually make it there, I've made more money off scaling out along the way than the very, very minimal contracts that actually made it to that 100 and 200%. So really compounding those gains and just aiming for those small goals, those 15, 20%, and position sizing, account position sizing. Never all in anything. If the contract is as much as your small account, don't buy it. If you're
Exactly.
looking at Amazon and you have a $1,500 contract and you have $1,500 in your account, don't buy it.
No, that's
Just stay
great.
away from the things like that.
Yeah, 100%, man. Um, so let's we got a question in chat. I'm trying to lead into it. When you're looking at that spreadsheet and you're going to purchase a contract, what are you looking at? Like, what's kind of your spreadsheet strategy, I guess you could say? The specific question, chat, is: do you pay attention to changes in Greeks before entering / exiting a position? If so, do you have any previous examples?
Yeah, absolutely. So a lot of times I'll go into swings first, because that is the biggest way you can kind of get messed up when it comes to option contracts, or those kind of low liquidity names that don't get a huge amount of volume, and you're looking to swing that position for a couple months out. You really, first of all, you have to check the open interest and the volume, because if those don't get any volume and they have hardly any open interest, one, it's going to be hard to, first of all, get a fill, and then second, it's going to be hard to ever exit the position, and third, with the less amount of volume and open interest, the less likely that move is going to happen, because less people are anticipating that move is going to happen. More likely it's going to reject and go the other direction. Also, when it comes to swings, I aim for point 0.4 delta. That is the main one I look at. And then, I never go super far out the money. So usually the point 0.4 delta is 1, 2, maybe 3 out the money. Most of the time, it's like the first one out the money is 0.40 delta. I did that on Procter& and Gamble just last week, I believe. I swung it for a couple of days. Like I said, I haven't been swinging anything very long, but I went one out the money on monthly contracts, and those are gave me the reason I go one out the money is because, first of all, you can get one out the money. It's a little less expensive, but you kind of have that security of almost being in the money. The further you move up in the money, obviously, the more your contract's gonna be worth, the more security you have when it comes to theta decay. And so that's what I look for. I look for that point 0.4 delta. They kind of give the most meat for the move without having to fork out all of the capital for a high delta. Sometimes I go a little bit less. Dependent on the volume and the open interest of the stock. But when it comes to day trading, first out the money, almost always. And the only time I don't do it is I like whole numbers. So say I'm looking at Microsoft and it's at 320, hypothetically, it's sitting at $320. And I want to get first out the money. Well, that first out the money on Microsoft, I believe, will be 322.5. Those always have less volume, less open interest. I think it's just because the 0.5 interval. I'll just go ahead and get the 325 contracts. And it option for day trading for me, it does not have to make it in the money for that to be a good trade. You can make it almost in the money and then trade it sell it the same day and still collect plenty of premium on that move, right?
Sure.
If it makes in the money, that's a bonus, but I'm obviously not looking to hold that further than either 15, 20 minutes or just the day itself. So if it makes in the money, cool, but I'm really just looking to capitalize on that premium move along the way. And the 325s, obviously, they're getting more open interest, they get more volume coming in. The premiums are going to move a little bit better as well with more volume coming into that specific contract.
100%, man. I love that. That's a great answer. That question was from Methods, by the way. Thank you, Methods. Appreciate that. We got another question coming from chat. Listen, guys, we'll just do the Q&A at this point. If you guys have questions, put them in the Twitch chat and just at 100 a million so I see them. Thank you. So we got a question coming in from Scott. What clues do you look for to see sector rotation is happening or ending?
You can look for fundamentals along the way. So recently to detect sector rotation from a lot of those tech names and mainly tech names. A lot of tech got pretty hammered recently. Into those value names is the interest rate hikes. So most tech names, they don't offer dividends. So people big investors are looking to put their money where it's going to make more money. So they're putting that money into things that's going to give them money over time. And those value stocks, a lot of the XLPs, a lot of the Dow itself has dividends. I mean, the only ones that have dividend queues that I can think of is Nvidia, Microsoft, things like that. But that's just a fundamental example. So the interest rate hikes, we see that money flowing into those value names, and then we will see that money flow out once again. So um, like I said, the Dow has been on the move, but XLP being kind of the biggest sector that has been on the move. So you see names like Costco and Walmart really moving off of that, right? So we're seeing that continue to move. And at that point, for money to start flowing out, you kind of look for the market to start absorbing that kind of fundamental information that kind of gave you the clue as to why that money flowed out of here but flew into here, right? So um, we'll see the market start probably absorbing that interest rate hike acceleration or whatever the case may be, and we'll see money start flowing back out of XLP into those tech names once again. But if you don't want to look at the fundamentals, you could always just look at the sectors themselves, and these kind of help definitely give you examples throughout the day or at the beginning of the day to kind of know where money's flowing that day. You can just look at the setups per sector. So if you don't know the sectors, you got XLB, which is building materials. You have energy, which will be names like Exxon, Chevron. Then you have the financial. This will be all the banks. Industrials. This would be things. Steel. Um, Cat. I think DuPont. And then you have technology. Obviously, that one's been on a significant reversal from the highs. So this is you see money flowing out of here, and it looks like tech is looking like it actually wants to kind of break down. And so if tech breaks down, continues to go lower, you still will see that money still flowing elsewhere. So tech is one that you'd want to stay away from. If you see the tech sector going lower, obviously you're not going to want to put your money in tech. You want to look at other sectors as well. Then you have consumer staples, XLP, like I said, and then utility. This would be things like NUE, I think, which was like the biggest one recently. And then you have healthcare and consumer discretion. So we're seeing money flowing out of these certain sectors. We see money flowing heavily out of consumer discretion. Where's it going to go? The thing that's probably still going up. So we're still seeing money flowing in XLP. We see money flowing heavily out of healthcare. So obviously money is rotating out of healthcare. Where's it going? Probably XLP or XLB, or even XLE, which is still making new highs, right? So that's kind of the X's are just the biggest indicator that you can absolutely watch. I didn't notice this actually. XLE is breaking out of an inverse head and shoulders, as you can see here.
Sheesh.
It actually looks like it wants to go higher. I didn't notice that until right now. So
Okay, okay. No, I love that. Thanks, man. I think that's very helpful. Hopefully you guys took some notes there. That's awesome. Another question coming in from chat. This is from A Mercado. Can you talk about how you create your watch list for the day? And do you use a scanner? And to add on to that from me, do you look at options flow at all?
I get okay. Well, I'll start with that one first. I'll start with the
Yep.
option flow. Barely. So I
Gotcha.
I look at options. I don't make my trades solely off option flow, but I do use them as kind of conviction as to whether or not I think this is a good idea. It adds extra conviction. Technicals are my number one reason as to why I'm entering this trade. Second would be the fundamentals as to why it's moving. Everything has a catalyst as to why it's moving up, whether that's sector rotation or whether that's news, whether that's it being a meme stock, anything. It always has a catalyst as to why it's moving. And then number three, the last one would be option flow. And I just kind of use that as a confirmation bias or be like, maybe this isn't the best idea. So if hypothetically I was looking to play XLE here, but I looked at the option flow and it's just like puts upon puts upon puts upon selling calls upon selling calls, it's just straight bearish. I'd be like, okay, well, maybe I should rethink that. Maybe that's not the best idea because obviously, if 90% of the sentiment is bearish when it comes to option flow, it's likely going to reject around here. So I kind of use option flow as a confirmation bias.
Gotcha.
And then how I develop my watch list every day is I do exactly what I just did. I go through every the main sectors and kind of see where I think money is going to be flowing, and then I build upon those, right? So, I have lists, but I pick there's top holdings for each of these sectors, in every major ETF. So like the Dow has its top holdings, the Qs they have their top holdings, SPY obviously has its top holdings, and then each of these individual sectors they have their top holdings as well, and you can find those just type in XLB top holdings, it'll bring it right up on Google. But but you can look at those top holdings. Obviously, if that sector is going to be moving, I don't play the sectors themselves most of the time because they move very, 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 very slow. But the top holdings of the sectors usually produce a little bit more volatility and a little bit more action throughout the day. And then obviously, like we addressed earlier, if I don't see any of the sectors that look very good, then I'm going to revert back to my
You got your core.
my main list of the core list, just the volatile names, and I'll always keep those on watch. They're kind of I know in my head I actually don't have a specific list for them. I just know them in my head. I'm like, oh, what's Apple doing? Oh, what's this and this doing? But I have a very, very extensive, just regular watch list that I watch. But I set out my watch list every morning of what I'm looking at for the day, and then I don't go very much beyond that. So if a lot of those names aren't really moving, likely the market itself probably isn't moving that well as well. So if the market is very, very choppy, it's okay for me to not take a trade in a day. I'm okay with sitting the day out and just kind of watching to see, what the market wants to do, right? So.
Yeah, definitely, man. Thank you. Another question coming in from chat from KDF, and then we'll look to kind of start wrapping things up here. Is it a good idea to trade oversold / overbought tickers based on RSI levels? Just found a scanner setting that shows that.
In my opinion, I only use RSI overbought, oversold on the major indices. So SPY Qs, I use them to sell if we're kind of looking at being a pullback or being bought up. But for intraday trades and for pretty much anything else, I don't ever hardly use RSI. It's a very, very rare occurrence. And I did miss a question earlier. Do I use market scanners? I actually do not. I use zero scans. I scan everything manually with my eyes every morning. I flip through all my watch lists and find what looks best to my bias. I don't actually go through any scanners.
Gotcha. Awesome, man. Thank you. Thank you, chat, for the questions. Once again, thank you, Ben, for coming on. To wrap things up, let's talk a bit about East Side options trading. I don't know if you want to showcase that on here or what you want to do, but let's talk a bit about what you're providing for the community.
Yeah. So I started East Side options trading, and my goal here is to just kind of help people day in, day out, and that's what I do. I'm very, very attentive to my chat every single day. I give my ideas, and I have a few others giving their ideas as well. But I do sessions like we're doing now. I do live sessions nearly every day. They're recorded just to help people out. Then I do chart requests on live sessions. And I used to do morning sessions, and I would kind of trade live through voice chat. But that's very, very hard. And that's one thing that I had to put a standstill to because it's very hard to commentate and you do it. And
Yeah.
I believe, right?
Yeah, I do. It is really hard. It affects your own trading at the end of the day.
Exactly. And that's kind of why I was like, okay, I need to step back from this. And I need to move into this kind of gradually because I was doing that every day, and it really took a toll because you're concentrating on your chat, and you're concentrating on answering everybody's questions, you're concentrating on this and that and commentating, and then you obviously you have to trade as well, and it's like I was making poor decisions, and so it's like for the greater good. And so
I can't relate to that anymore. It's like I was taking so many L's doing that. Like I really loved it. It was fun, but like to a point, you know what I mean? Just L after L, man. It's very tough.
Absolutely.
Because then if you don't take a trade, you feel like you also have to be entertaining. So it's I don't know.
Yeah, it'll force you to take a trade.
Yeah,
like,
yeah.
Well, I'm talking to everybody. I need to trade something.
It's like awkward, right?
It's like, oh man, I made some bad decisions, but I stopped doing that, and then my win rate has gone skyrocketed upon then, even with bad market conditions. So it's like that was kind of the route. I might start doing it again, but move into it gradually, get a little bit more comfort with it because it's very rough, very, very rough. Yeah.
Couldn't agree more. So how do they? How can we find Eastside Trading? How do we get in there? What does it cost? We're banging at the door.
Banging at the door, right? So,
Yeah.
it's the website link is in my bio.
Can we pop that up?
It's $35 a month, basically $1 a day.
Awesome.
Um, and it's just a website. You go to it, eastsideoptionstrading.com. Very simple. Yeah, but I like the community that I've built so far. There's a lot of very, very helpful people in there. Try to keep it very, very active throughout the day, right? So it's just fun to me. And having other people to bounce your ideas off of and really collaborate with throughout the day kind of makes the whole trading process a lot easier. So um, I do believe it's fun. I like calling out trades and seeing people make money, and then I also like seeing people make their own trades off of information that I've provided. So like I'm very, very heavy on doing these live sessions every single day to recap and to answer everybody's questions. And I make videos from time to time on different strategies and whatnot. But I try to stay like very attentive because I'm obviously doing this all day. Like share it with other people, and there's some very, very good traders in here. And some of them they don't take a single one of my trades. I think they're just here to talk to me sometimes. They're amazing people.
That's awesome,
So
man.
yeah, I like it.
Yeah, no, fully. I'm so happy for you, man. I'm so happy for the group you put together. It seems awesome. You got some super sound strategies. Some great trades. Amazing TA. Really can't go wrong. If you guys in chat or anyone watching the YouTube video, this will be on YouTube, by the way. If you'd like to find this room that we're talking about, please hit up Spy Hates Me on Twitter, and it's right there in the bio. And it's going to pull up this beautiful looking website right here. It's going to tell you all about it. Okay. It's like $1 a day. So why not give it a try? All right.
Yeah. 3 days free too.
Oh, that's awesome. 3 days free. Sweet. That's even better, man. Awesome. I love that. I'm a big pusher of the free trials. You know what I'm saying? Try it out. Get your foot in the door.
Right.
And take it for a test drive, right?
Exactly.
Awesome. Yeah, so I think we'll kind of wrap it up with one more question for me. I asked this at pretty much all the end of every interview that I do. If someone is having like a really rough time right now in the market, like just red day after red day, blew up an account, blew up another account, more red days, how can you get out of that kind of psychology that you're really down on yourself, you want to quit? How do you pull yourself up out of that situation?
Right. So I actually experienced this in December, and I was very transparent with everybody. I was like, look, my trading it's not up to par right now. And, when you're really sitting down and you're looking at it, you're like, I don't know what I'm doing wrong. Right. I'm following my rules, I'm following my strategy, but I just can't seem to catch a break. And I took the last week of the year, not the whole week. I took Wednesday all the way till Sunday, and I took it completely off, 100% off.
Awesome.
I had a friend come in town. He was like, "Hey, I got a surfing trip coming up right close to you." He's like, "Do you want to come with me?" I was like, "Yes, absolutely." So I went surfing for a week, the last week of the year, and I really just got my mind off it. That's the whole thing. You don't have to go surfing. Obviously, it's 30 degrees outside.
You
Only
have
crazy
to
people
surf.
like me do that.
You have to go surfing.
Just go do something you enjoy.
Yeah.
Come back with a refreshed mind, because I do this day in and day out, and it gets to you looking at that screen all the time, and you just need a break. It's just like when you have a regular day job and you just get fed up with it eventually. You're like, I just need a break, and you go take 2 or 3 days off, and you come back, you're like, you know what? I still like my job.
Yeah.
I just needed to take a little time off.
100%.
And that's the biggest thing is, as long as your strategy is sound, in this market is not the easiest to trade right now. Up, down, up, down, up, down makes it very, very difficult. So trading less right now is obviously a very, very big part of kind of staying away from those losses. Trade on the good days only. You don't trade on the bad days. But just take a break, refresh your mind. I promise that's like the best medicine that you can absolutely have if you're really in a slump.
It's Awesome, man. That's great advice. Yeah, I think that's good. Unless anyone has any more questions, I think we'll wrap things up here. Thank you for taking the time out of your Saturday, man, to come hang out and talk some stocks with me. I truly appreciate it.
Absolutely. This was actually, I think this is my favorite podcast live stream anything I've ever been on.
Really? Damn. Thank you, sir.
Yeah.
I take a lot of pride in that. You know, I try my very best to keep things flowing, keep it interesting, keep it about stocks, very specific. So I truly appreciate the compliment. And chat, this will be available on YouTube as soon. Actually, sorry. This will be available on Twitch under videos as soon as I hit end stream. This will be available on YouTube in a couple days. I just have to export the files. But yeah, once again, Ben, huge thanks for coming out here. I know I learned a shitload today. This is awesome, bro. Definitely keep in touch. And yeah, thanks for coming on, man. I appreciate you.
Absolutely. Thank you for having me on so much. I really appreciate it.
Of course, of course. All right, man. Have a great rest of your Saturday and a great weekend.
You as well. Thank you.
All right. Take care. All right, traders. It's just me and you now. How we doing? How was that? Can I get a round of applause? Can I get a round of applause in chat? Or type some ones. Type some ones to send applause. Ben's a solid dude. He's awesome. Jake, he's awesome. That was such a sick interview. Look at all the ones flying in. Spam the ones. Thank you guys for joining me today. This is a great, great interview. Like I said, this will be available on YouTube in the coming days, on Twitch immediately at the end of the stream. Thank you guys for joining me. I'm your host, 100 million. Make sure you follow me out on Twitter, Twitch, YouTube. That's it. That's all I really care about. Have a great night, guys. And we'll see you in tomorrow's interview at 5:30 p.m. Eastern Standard Time. Tomorrow I have Honeydew coming on. Look at Sunlit Trading. I need to remove that VIP status. I'm joking. But yeah, tomorrow at 5:30 p.m. Eastern Standard Time, Honeydew is coming on live to talk more about stocks, her trading strategies, and things like that. So please tune in. Have a great night, guys. 100.